Rahul Sharma is joining us from JM Financials. He's been calling out the market pretty accurately past couple of months. First, the sharp rally, then he was getting a bit uncomfortable on the levels of the market. We did see a swift and a very shallow correction. Rahul, it appears that the moment market is changing its colors and the complexion, you are also changing your style. Sometimes you have a beard, sometimes no beard, sometimes all black. What is happening? It's got to do with the changing colors or the complexion of the market, is it?
I think adaptation is the key. So, the kind of volatility we have these days, I think that is one character trait that, we all should have.
Yes, that's correct. So, what to do? Yes, do you think any chances of visiting the morning lows, or it appears that station has been taken out and now we are looking back ahead or higher levels?
So, two things, yesterday's correction was more like the boy who cried wolf. Everybody was expecting that, it would be the FIIs who are selling year-end, selling pressure, booking profits, closing their books at a record high, etc., etc. But the data just doesn't prove that. In fact, they've added longs in index futures. They've added longs in stock futures on a down day. And even the cash figure, the sell figure was hardly, anything to be worried about. So my reading is this is just a knee-jerk reaction to the extremely overbought condition that we were in. On the way up, we rallied about almost 3,000 points. We didn't ask questions, and this correction also is something where the kind of fear that was there yesterday. India VIX was at a multi-month high. The kind of liquidation we saw in mid caps and small caps was something which shook a lot of people. In terms of the volatility. Now, the way this situation is, maybe next couple of days of volatility may be there. Weak hands are probably out of the market in the yesterday's correction. Having said that, two levels to keep an eye on. One is 20,950. We reversed 25 points from that level in the morning in the first half of trading session today. So that remains a crucial support. That is where the put writers are also present, both in the weekly as well as the monthly expiry. Second is we have the 20,800 level, which is a technical support for the market. Now, in case these two levels do get revisited or visited in the next couple of sessions, look to buy quality setups. We continue to remain bullish on the reality space. We feel that banks, the another leg of up move is yet to be done. We feel private banks are the ones to go for at this point in time. We saw PSU banks do extremely well last week, and the macro setups where we feel that there is a lot of headroom left are the ones to be reinitiated at these levels or added on to this correction. So all's well. I think we need not worry. It is eventually a bit of a pullback which was much needed. Even if it extends another 200 points from here, that would be a welcome dip. And like we have been saying in the past, a lot of money has missed out this rally. So the FOMO gang is, that money would come in, at every corrections. And we feel that, today is a prime example of, exactly that happening. So we remain more optimistic than fearful at this point in time. And we feel that there is more upside to be had in the next couple of months for the Nifty.
What are your trading ideas in specific right now?
Yeah, so one thing that we like is the chemical space. Chemicals, there are a couple of things happening. 2 years of underperformance, a lot of positive developments fundamentally in terms of expansion and all. Deepak Nitrite, which is the sector leader, it remains our top pick. If you see the charts, multiple times it has faced resistance around the 2350, 2400 mark. I think eventually, in this up move, it should be taken out. So one can look to buy Deepak Nitrite at these levels. If you have like a 3-month horizon, we're expecting the stock to test upwards of 3,000 rupees. But if you have like a slightly longer horizon, maybe around 6 to 8 months, we feel that this stock can actually deliver significant alpha and may even head towards 3,400 on the upside. So from both the medium term as well as the long term perspective, we feel Deepak Nitrite is a very good buy. It's a large cap stock. It's there in FNO space as well. Can be bought at these levels. Have a stop loss placed at 2180 on a closing basis. So not, very little downside in terms of the risk reward. And we feel that once the breakout does take place, this is, one of those sectors which can deliver the performance. So this is one stock that we like on the F&O space. Another stock that we like is Zomato. Zomato, we've been bullish on it since 85, 90 odd levels, but even at these levels around 125, I think there's a lot of upside to be had in the stock. From a 1 month perspective, we feel that the stock can head towards 150 on the upside. So look at this volatility to buy Zomato on this dip. Have a stop loss placed at 114 on a closing basis, and we feel that there's more momentum left into this stock. So there are two ideas. One is from the chemical space, and second one is Zomato.
Okay, we'll try and pull up those stocks as well for the interest of our viewers to get a sense as to what those recommendations are. Zomato, of course, is sitting with a gain of around 1.28%. On that note, Rahul, we'll let you go. Appreciate you making time and speaking with us.